Good afternoon, this is Giuseppe Basile. I'm the analyst and trader. You can find at the blog FibonacciStalking.com. I also post regularly on Twitter using the @FibStalker nickname. Good afternoon, today is Monday, March the 4th, 2013. It's 3 p.m. Italian time. I want to remind you that the time zone is GMT+1. This video is my FibStalker view on futures for Monday, March the 4th. This video is part of my newsletter I'm going to send today on Monday. In the last 2 weeks I've reduced my posting because of the Italian elections. I was deeply involved into that that process, and now I'm back full-time on trading, and I will resume my posting and sending out my newsletter and the midweek update during the week. So if you are watching this video, I usually post this video 10 to 15 days after the post to my after the post of the newsletter. So if you want to receive this on time, as soon as I send it out, record and send it out, just go to my website and subscribe to the newsletter. It's free, and it only takes a few seconds. In this video I'm going to review the dollar index futures, the euro dollar, very quickly, because there are also two other more videos in this newsletter talking about the euro. The first one, which is the long-term view of the euro, and the second one is the comment to the trading plan for the euro going forward. And so I will be very brief on the euro. And the third future I'm going to look at is the S&P500 E-mini. So let's start from the dollar index, which is actually very interesting here. So first of all, I have to bring your attention to a couple of levels. The first one is the resistance level, and also a short area, setup area, which is traced from highs in July 2010 to lows in July 2011. And as we can see, we identified this 84 area of resistance. That's the level where the resistance starts. And as we can see, we had a reaction from this level, and price was pushed lower here. On the other side, we had also a long setup actually, and the long setup can be identified from the lows in April 2011 to the highs in at the beginning of 2012, and we had this 79.30 level of support. As we can see, this acted as a support in February 2012, and again the beginning of May here, and this is pushing price higher. And as we can see, when price came back to this level 79.30 in September, and then again October, but also November and the beginning of February, we had a reaction higher. So we had long participation at this level. So what can we expect now? We have a price of the dollar index moving laterally between this 84 and the 79.30. We still anticipate weakness for the dollar, and the fundamental reason is that even if the cut will stay, that will be 80 billion per year, but at the moment the United States, the Fed is actually spending 85 billions per month to buy back MBS as well as long-term debt. So fundamentally, I don't see a specific reason why the dollar should keep moving higher. But as you know, I don't trade news, I don't trade fundamentals, I just trade price. But it's good every now and then try to frame price action within fundamentals. So since the beginning of February, we had this move higher, and we had a related move lower in the in the euro, and we had actually this market moving in extension higher since the beginning. This extension long since the beginning, from the from February the 2nd high here to highs. We had this first level of support 79, actually 80, and two level of target 80 and 81 30, and those who followed me, I gave these targets in advance. And actually we got there. Then price continued in extensions from this high to highs, and as we can see, the 81.20, 81.30 area acted as again as a support, and again we had two targets, the 81.90 and the 82.20, and both of them were hit as well. So the next so we expect we might get some sort of retracement here. We have two levels we have to watch. If we get a deeper retracement, the next level of support is going to be 82.20 area, with a first target in this 82.70 area, but we have a second target above that as well, and it's this red dotted line here in 83.10, and this would be the level that we have to watch if we get a deeper retracement. But we could also get a very shallow retracement. Maybe the retracement is also it's always done. So maybe maybe we won't go below this. Let me remove this one. We won't go below this 82.20 here, and this is going to be support in the short term. So what we expect is probably this move to complete here, maybe going to 82.70, but even 82.90 or 80 here, and leaving time to the euro to reach that 129 level we are watching. So that's what we have to expect. Below 82.20, we need to start looking for a deeper move here, and this could be the start of the reversal of the dollar index here. So very quickly on the dollar index, sorry, on the euro FX currency futures, we have this level of support 129 area in which we expect participation. So the simple thing we can say here, and you can review the other videos, is that we are waiting for price to get back into this 129 area, and then we should see some sort of consolidation. I'm going to detail what we could expect here in the video dedicated to the trading plan for the euro. But if we don't move below 12700 here, we have a potential target in the 141 level in the next 3 to 5 months for the euro. And finally, the S&P500. So those who follow me know that in the past we have been watching this level of long participation starting in 1390 and with a stop below 1375. As we can see, this level held. There was long participation, and there were two targets as well, 1472 and 1515. I gave these targets with days in advance, and as we can see, price hit and went above the second target in 1415, and in my last review that I made on the SPY, because I didn't have data for the SP500, but actually the levels were the same, I've indicated two potential levels. The first one was the all the way halfway back from the lows in November, and that was a support level in the 1432 area here. The more probable level, and it was an extension higher from the highs in December to recent highs, and that was the 1489 level with a stop below this 1477 level. Now this level held, as you can see here, so I'm going to remove this other level here. What could happen is that we could see a retest of this 1488 as the euro corrects into that 12900 area. At the moment there is a direct correlation between the S&P500 and the euro dollar. So if we get to 1489 again, I would say that that's a very good opportunity to buy the S&P500 with a stop below 1477 and with a target in the 1548 46 level. There is no reason why at the moment the S&P500 could not get there. So I hope this video is useful, and it can help you in trading the instruments you are interested in. I expect a renewed weakness in the US dollar in the coming days and weeks. Thank you very much for your attention. If you want to receive this video on time as I record it and send it out in my newsletter, and my midweek update, just subscribe my newsletter on the FibonacciStalking.com website. Thank you very much for your attention, and all the best. See you soon. Bye bye.